Hey folks, how's it going? It's Erika here and it's nice to have you back on my YouTube channel. There are more than 180 different currencies in the world and most of them are available for binary options trading. I suggest we find out whether it is worth trading exotic currencies and consider pros and cons. And sure thing, I will show you how you can make a profit on binary options. We'll talk about it in detail, watch this video up to the end and you will find out loads of interesting stuff. In the description below this video, you will find a link to my Telegram channel where you can ask me any questions you have. There is also a link to my Telegram channel there where I share my daily trading signals. And there's more to that. If you text me on Telegram, you will get a link to the PocketOption registration, which will give you a 50% bonus to your deposit. And that's for free. And now we're switching to PocketOption and let's go trading! We go to the trading platform and here is the price chart of the Swiss franc Japanese yen currency pair. I am using two indicators, the Williams percent range and the Arun, to help me with technical analysis. The first trade will be a down trade. The trading amount is $350 for 1 minute. During the analysis, I noticed that the Williams line, having bounced off the overbought zone between the levels of 0 and -20, began to decline. The price was also declining at this time. As you probably remember, this combination gives us a signal about a possible price decline, and I decided to take the chance. And while the trade is on, we can start a conversation. Traders pay the most attention to the main currencies in the foreign exchange market. This happens for simple and clear reasons: high demand, relatively low exchange rate fluctuations, protection from local crisis phenomena. However, a huge number of traders, in one way or another, track at least one exotic currency, the one in which the money of their own country is denominated. Let's get back to the topic in a second. And now the trade has ended and we were able to earn $318.5. So, returning to our topic, let's analyze the features of trading exotic instruments. The name exotic pairs includes an extensive definition of low spread, low liquidity national currencies paired with the dollar or euro. They may belong to European countries, such as Norway or Denmark, for example, or large Asian countries, Hong Kong dollar, rupee, Korean won. But mostly they are currencies of developing countries with a low level of contribution to the world economy. The most common reason for trading exotics is home currencies. Each trader knows the diseases of the currency of his own country. They want to avoid inflation risks and protect their income. The greatest influx of traders into exotic currencies is observed when a country is experiencing a local economic crisis. Problems do not disappear overnight. Exchange rate fluctuations and short-term weakening against the dollar and euro give speculators the opportunity to currency hype. Right now, let's go back to trading and open an up trade for $350 in for 1 minute. I noticed a slowdown in the price decline while it began to try to grow. The Williams percent range indicator did not help me this time, and its data contradicted the price movement. But the Arun indicator confirmed my predictions, since its blue line responsible for the upward movement was at the level of 70. And the red line was about 0, which indicated the predominance of the upward movement over the downward movement. Let's monitor the progress of the trade and get back to our topic. In most cases, exotic pairs have a so-called special exchange rate system. The National Central Bank is obliged to observe a strict binding to one currency or a basket of major currencies. The IMF admits that the local regulator can keep the course in a certain corridor. Pay attention to the chart. The price rose very well and we made a profit of $301. Unfortunately, the payout decreased. Moving on. The strategy of traders trading exotic pairs is quite simple: buying the national currency at the lower rate or selling at the top in order to pick up the rebound. The corridor can be recalculated and enlarged, so a short-term strategy is used. The oriented mode means that the central bank is obliged to ensure that the exchange rate of the national currency is linked one-to-one with the euro, the US dollar, or other anchor major currencies. This is not feasible in everyday trading on the stock exchange, which gives traders the opportunity to catch deviations from the currency constant from top and bottom. We'll get back to this in a while, very shortly, and now we will open another up trade for 1 minute with $350 in. We see that the price started inactive, one might even say an impulse growth, after which a correction was expected. But I believe that the growth is not over, and my opinion was supported by the Arun indicator, since its blue line rose to the level of 100, while the red line remained near zero. And this gives us a strong signal about possible growth of our pairs rate. Now we can continue the conversation. So traders catch deviations from the exchange rate of exotic currencies during the day. The Emirati dirham paired with the US dollar is an excellent example of the stability of the exchange rate, where the tails of candles give daily opportunities to make a profit. A similar exchange is the Danish krone. The local central bank daily strives to finish trading at a rate of 1-to-1 with the euro, but deviations are still present on the chart. And now, another trade has been completed and our balance had been replenished by $304. Let's not interrupt an interesting conversation. Developing countries often have an export structure with a sharply dominant share of agricultural products or minerals, the recent price of which can lead to strong trends in the national currency. If a trader is able to predict crop yields, has access to raw materials consumption forecast analysis, and knows the local news of the country, they will be able to create medium-term strategies for certain exotic currencies. Generally, any traded asset, currency, stock, bonds, or commodity has features, knowledge of which allows a trader to study and create a set of specific situations that guarantee a high probability of profitable trades. So that the trade does not stand idle, we will open a new up trade for 1 minute with $350 in. As we can see, the upward movement is not over yet, but it has noticeably weakened. Nevertheless, Arun continues to talk about the presence of an uptrend, so we follow it. Let's continue to find out the details. I would like to note that studying the features of exotic pairs will take a lot of time to determine the rest of the trade. While trading major currencies, we got 8 pairs and 28 different combinations of them. This is enough to implement the principle of a multi-currency strategy and save trading from unpredictable movements of exotic pairs. Unpredictability arises due to the internal policy of the state or the specifics of the current local economic situation. Meanwhile, the trade closed at a profit and I made $322. Today the payout is fluctuating. We're not done yet and continue the conversation. Traders are often attracted by the high fluctuations in the exchange rate of exotic pairs. During the day, the currency can bring 3 to 5 times more profit than other pairs with the yen. But such fluctuations can also increase losses, and brokers often limit the amount of payouts on these pairs. If there are no restrictions on such practice, then the traders should be prepared for the risk of non-market prices, gaps, slippages, and other technical overlaps. The broker is not interested in exotics, hence all the problems with trading support. Let's resume trading, see the same signals, and open another up trade for 1 minute with $350 in. The signal from the Arun indicator doesn't change. It still shows the presence of an uptrend because its blue line is at the level of 100. In addition, Williams began to show the same thing. After all, its line was in the overbought zone and continued to grow. This is also a signal of a possible increase in price. Observing the trade, let's return to the conversation. The rule of thumb to prepare for your trading session is to study the calendar of economic news. Exotic currencies will increase the time of this process, as the trader will have to track an array of information for each country in order to be prepared for unexpected movements within the day or to be aware of changes in monetary policy. All this pushes most traders away from exotic pairs. Looking at the chart, we will see another successful completion of the trade and a profit in the amount of 322. This concludes the trading session and we can have a look at the results. Once again, we saw it to ourselves that currency pairs can cause surprise. And today we witnessed an active change in the exchange rate of the selected asset, as well as great changes in the payout in a wink of an eye. That said, we were able to close 5 successful trades and make $1,568 on them. A nice result. To recap on what's been said, with a careful study of their features, history and fundamental analysis, exotic currencies will give the trader a set of patterns that bring a profit in the long run. Exotic makes it possible for you to spot out the niche, work out nuances that major players who are engaged in speculations on major currency pairs do not pay attention to. But you should be well aware that it is hard for a trader to trade exotics using technical analysis, for some of them have a limited trading time during the day. What's more, gaps introduce serious errors in the indicator's values, which cause a lot of false signals. I do hope the information you got today will help you make money on binary options. At the end of the day, it's only practice that can teach you to understand the market. That said, if you're not experienced enough, it is essential that you carefully assess the current market situation before entering a trade. By and large, I recommend you to use the indicators whose signals you can read, for this helps reduce the risk and make a profit in the long term. I would like to encourage you guys to keep trading binary options, for as we can see, the analysis techniques are super simple here. And before we say goodbye, in the description below this video you will find a link to my Telegram channel, where you can ask me any questions. You can also find a link to my private Telegram channel there, where I share my daily trading signals. And there's more to that. If you direct message me on my private Telegram channel, you will get a personal link to the PocketOption registration that will give you a whopping 50% bonus to your deposit for free. Now, dear friends, this is a pretty nice offer. Thank you for being with me all this time. I hope you enjoyed the video, and if you did, please give it a thumbs up for the YouTube algorithm, subscribe to my channel if you haven't done so yet, and smash the notification button so you don't miss a thing. That's about all for today. Good luck in the market and take care, folks. See you soon in the next video.